Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, July 31st, 2023. Before I click through the charts, I just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Also, if you would, share the content with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least a 20% move on those underlying stock picks. And we offer a 5-day free trial at the front end of your subscription. So if you don't like what you see within 5 days, you can bow out and there is no charge to your card whatsoever. So here we are, Monday's daily Tesla report. I'm going to backtrack a little bit, go a little bit through last week, tell you what my thinking is. First and foremost, this weekly chart, this is what I call sell signal rejection, number 3 at the very end of the week. And I'll get to number 1 and number 2 in a moment. But, over the last month and a half, we have quite amply tested this rising channel top that stems off the January low. I call this midterm resistance, 293.49. This formation able to contain buying on at least a weekly, quite possibly monthly basis. And, for all intents and purposes, it has contained buying pressures for the last 5 or 6 weeks since we started testing it about 6 weeks ago. And so here we are. We did push through it a couple of weeks, obviously. Threw off on the daily chart in the middle of the week, a couple of intermediate or tentative buy signals, but that obviously didn't follow through. We came falling back, and in fact, the week that we actually pushed through the channel top 2 weeks ago, we fell off and put out a key reversal high, which is nothing more than a new pullback high followed by a settlement on the same bar below the preceding week's low. And that usually is a sign of impending selling pressures, an overbought trade. It's also the bearish engulfing pattern within the candlestick speak. But that was actually neutralized last week when we settled back above the low of that high, and that was at 265.10. We also settled higher on the week. So it neutralized, in my opinion, the potentially bearish effects of that key reversal high. Now let's take a look at the week itself and how that played out. There's also what I call sell signal rejection number 1. And if you recall, that occurred early last week when we closed below this channel structure, this rising channel bottom. I am no longer really, I'm following on a day-by-day basis, and it will be a minor point here and there, but for the most part, I'm ignoring it because we've traded both sides of it without any follow-through whatsoever. So it's just sort of a kind of a chop, both sides of the market. Sell signal rejection number 1. Sell signal rejection number 2 occurred later in the week. On Thursday, we closed below a rising 1/3 speed line that was projected off that late April low. It actually held the preceding week. We came off of it for a few days, closed below it Thursday, right back above it on Friday. So, if you put together all the rejections of the sell signals, it generally implies, if the market is not interested in going down based on the sell signals, then it must be going up, right? And that is usually the rule of thumb, that sell signal rejections, when they're so classic like this, generally imply bullish continuation or recovery, except for in this situation, we are still in this channel structure, the top of which is 293.49. So I think this may imply a return to this channel top, but in terms of longer term bullish continuation, it really is, once again, a weekly settlement Friday above 293.49 by a 1% margin of 296.42 or higher. And then I see this all-time high of November of 21, 414.49, a realistic 3 to 5 month target. Until then, in terms of the bigger picture, despite, the sell signal rejections, which imply near-term strength up to 293.49 perhaps, and I'll get to that in a moment, this market, in terms of this 6-7 month channel structure, still remains susceptible. I'll use that word, susceptible. I don't want to use the word poised anymore because we're not in a sell signal to the downside. They've been rejected, but I will say susceptible to falling back to the channel bottom that is in the low 200s right now on the daily chart. In fact, you can see it here at 202.45, well below the market. So what now? Well, let's cover the upside first, and that seems to be the path of least resistance at this point in time. And I've got 274.47. This simple channel structure able to contain daily buying pressures, and if settled above 274.47, we should over the following 3 to 5 days rally up to the 293.49 long-term channel top I've been showing in this video on that weekly chart. So that is the upside you can see here, 274.47 able to contain session strength. I do have as an intraday resistance level 269.85. That is still the high of the low from last week, and it did roughly contain Thursday's high. It is a soft intraday pivot point today, pushing through 269.85. I would expect 274.47, where a daily high can be placed, and we could even fall off perhaps from 274.47 into the middle part of the week, back to what I consider to be near-term support for the week, which is 255.71. Very simply, the low settlement price that was put out on Thursday when we kind of settled right on our heels at the lows of the day. That is also the low settlement price following that high from a couple of weeks ago. 255.71 able to contain session weakness. Now 264.37 may well contain intraday selling pressures on the way down today, and that is not labeled here, but once again, this speed line that can contain intraday weakness. And yes, if we break that 264.37 speed line, I would anticipate 255.71 intraday, where we can place a daily low. We have a series of lows here, and the actual low settlement price is 255.71. If we close today below 255.71, I'm paying greater respect, if you will, to this longer-term rising 1/3 speed line as a level that may well contain weekly selling pressures. Because of the rejections of these sell signals, there is this sort of obvious disinterest in aggressive bearish continuation right now. There's also obviously no sign of longer-term bullish continuation once again, unless we close above the 293.49 formation by a 1% margin. So really what we have here, and I can put it all together on one chart, and that is to say, we've got an upward pivot point into later week above 274.47 within 3 to 5 days, likely to then test that long-term resistance at 293.49, and we have a downward pivot point with a settlement below 255.71 that should then, within a matter of 2 or 3 days, reach the 241.51 long-term rising 1/3 speed line. It's in close correlation with this pullback low here from late June that can contain weekly selling pressures. And we may even come off of this through next week and turn back up again, perhaps to the 293.49 long-term channel top within 2 to 3 weeks of testing 241.51. But as I've been saying, and I'll keep reminding you, and I'll keep driving home this point, and I can't ignore the fact that holding below the 293.49 long-term channel top will keep the long-term channel bottom, shown here on the daily chart at 202.45, in reach as kind of like a 1 to 2 month target. Say by the end of September, we could fall into this zone. And the clear signal at this point in time now, sort of the fallback, is 241.51. So this is our, this is a level, if you're a 2 to 3 week position trader, you can buy 241.51, anticipating the possibility of bullish rotation back to 293.49, that long-term channel top. And inversely, if we were over the coming days to close below 241.51, then I would expect just the opposite, a 2 to 3 week sell signal to 202.45. And over the next 3 weeks, this rising channel bottom does converge with this February high of 217 and change. So that's just worth noting. Until then, I think our 2 to 3 week dynamic is well shown here. 241.51 base, 293.49 resistance, our ceiling, breaking 241.51, and we are closer to it than we are 293.49, closing below 241.51, 202.45 expected within 2 to 3 weeks. This channel structure able to contain selling through the rest of the year. And once again, I'll take you back to the weekly chart, that when we settled several months ago above this 182.63 18-month descending channel top, that indicated, I think an ultimate retest of the 414.49 all-time high over the following following year, let's say. It could be sooner, and once again, that sooner would come with a weekly settlement Friday above 293.49 by the required 1% margin. An end-of-week settlement above this structure should result in aggressive vertical gains as we move into later year within 3 to 5 months, a retest of the 414.49 high. I'm trying to think if there's anything else that needs to be said. I'm going to take you back to this chart here and just reemphasize for the day itself, 269.85, able to contain intraday strength, pushing or opening above 69.85, expect 74.47, where a daily high can be placed. Great for day traders, and also 3 to 5 day swing traders may take a shot there on the short side because we could fall back to 255.71 within several days of testing 274.47. If we close above 274.47, 3 to 5 day swing traders are go long above 274.47, anticipating 293.49, where I might add, once again, we could top out perhaps on a longer term basis, which is to say into September trade and fall off back to the 202 area. If we were to close, sorry about that, if we were to close above 293.49 once again, then it's just to be long, maybe buying 515 out of the money calls that don't expire for at least 6 months. That would be the play to the upside longer term. Once again, to the downside for the day itself, we've got 255.71, solid level for day traders. We could perhaps bottom out here into later week, but honestly, I think this is good for a day. I'd like to see us come off of this quickly because if we hang out down here after all of these 3 days of testing, I do think the market, you just be careful. I'd rather be more aggressive buyer to the upside above 274.47 than bottom picking 255.71. Just a quick settlement below 255.71, and the very next day we may actually test that 241.51 meaningful support, which can contain selling pressures for the week. You know, I'm closing on 12 minutes. I don't like going this long. I'm going to leave it at that for Monday's Tesla report. Be back tomorrow, of course, with Tuesdays. Please click like, share, subscribe, and check out wickedstocks.com. Thanks for watching.